Hey Goku, I want you to meet a friend of mine. His name is Sasuke. You know what? He's heard a lot about you, but I don't know if you heard a lot about him. So I'm here to tell you. He been talking a lot of smack, and he said, you don't want them hands. That's all I gotta say. No. This has nothing to do with me. He said it. Are you gonna let him talk to you like that? Hey, y'all can handle that over there. Ooh, he hit him with the mean combo. I'll help you move. Hey guys, welcome back to the After Hours. I'm the ATL Beast, and today we're gonna talk about AURC in the market. When it comes to AURC, specifically what makes this the most important stock of the week is that it is a SPAC. Now we've talked about SPACs back to back, but what you really need to know is that SPACs are very risky and these stocks should not be traded often. But what makes AURC the most important stock of this week is why did the stock start running? When it comes to AURC, this has been out for over a year now, and it's been stuck at around $10. But more recently, there was news about its special meeting. And when it comes to these SPAC companies, you need to have the special meeting to complete the merger. Now there's a merger between AURC, Aurora, and The Better, which is an OTC bank. Now, when it comes to these two merging, they have made extensions for their special meeting, which is a prerequisite to complete the merger. Now, the extensions for SPAC companies are normal, but the extension usually has to follow the guidelines of the NASDAQ as well as the SEC. Recently, NASDAQ made their conditions for compliance stricter. When it comes to the strict policy of the NASDAQ, we know they are the strictest of all the exchanges. And now they just became even more strict. Their compliance regulations state that you need at least 500,000 shares public float to meet the standards for NASDAQ, as well as the market value for those public shares has to exceed 1 million. But when it comes to the extensions for SPAC companies specifically, you need to know that you need to have at least half this value to be able to apply for extensions.
Now, when it comes to AURC, this one was the biggest stock of the week. Now, the reason it's the biggest stock of the week is because not much happened this week, but AURC took the cake. Now, the reason AURC is special is not because it had a special catalyst or it went up 1,000%. It's actually why it surged over 240%. Now, AURC, it ran 240% on no apparent news. Now, we know by this point that there's always a reason, and it's usually involving boredom or a mistake. Now, at AURC, there was a mistake. There was a mistake in the filings. The retail crowd, they found it out. AURC, this surge of 240% is all the attention that was brought from that mistake surrounding the public float. I'll explain. On Tuesday, AURC went up 240% higher than its normal $9, $10 that it had on the previous close. On the first day that it went up, it went from $10 all the way up to $38. And that traded 5 million shares. But on the next day, it only traded 1 million shares after it pulled back over 25% from the high. Now, before it reached $38 per share, there was an investigation. Now, this investigation, it was done by the retail. Now, the reason it was done by retail is because AURC did not meet NASDAQ compliance. When it comes to SPACs in general that are not meeting NASDAQ compliance, they received a lot of attention in the past month. And that's because SPACs just received a notice from NASDAQ saying that the compliance rules are now a little bit stricter. Now, the reason they're so strict is because SPACs inherently are risky. Now, the biggest risk that most of these SPACs face is at any moment they can be halted, and they can be halted for as long as the SEC wants. Now, more recently, we saw a T12 halt, especially on MEOA and EDTX and others that fell below the market standards. Nonetheless, some sources pointed out that AURC had a private placement, and this private placement is usually not available to the public, whether it's like a trust fund or just private investors. Those are technically not publicly traded shares. So you can have a company with 20 million shares. If 19 million of those shares are a part of the trust fund and are not actually traded on the public market, you technically only have a float of 1 million because you are uploading the company's shares on the public market. And that's what is being traded. Now, AURC, this one, when it IPO'd, it had somewhere close to 27 million shares, but most of those shares were private placement. After you do private placement, as well as redemptions, it's left with something close to 200K. And these 200K shares are well below the standards required for the NASDAQ. So it was reported by NASDAQ that in April, they were warned that the company did not meet compliance. And when you don't meet compliance on NASDAQ, they tell the police, they tell the SEC. Their job is to ask questions like, where's the money? Where's the float? Why aren't you following the rules? At the end of the day, they had an extension filed in March because they knew they didn't meet compliance. And they received a letter in April saying that they did not meet compliance. And then their extension that they filed in March, it was finally accepted in June. Now the next extension for this special meeting to complete the merger is set for August 11th. Now, up to that point, this can technically be halted. Now, this big surge in price actually comes from speculators. Now, what are they speculating on that makes it such a bullish opportunity? Honestly, I don't know. But we do know it's a part of the catalyst because this is what brought all the attention to AURC. In general, we know this involves finance and it's a conglomerate, which means that it deals with banking, insurance, as well as other investments that involve a lot of money. We're talking buku bucks. Now, when we talk about finance, there's usually a lot of backers, and there could have been any one of the backers that instigated that AURC is the next big move. And that could have been the reason for the spike. But at the end of the day, we also know SPACs, they can just be volatile like that sometimes because speculators are always looking for the next supernova. My theory is the speculation around the public shares is what actually brought the attention to this ticker. And then that attention put it on social media and then it went viral. Now it only went up 5 million shares at a time, but we have to remember that this was a micro float. It was a nano float. It was actually under 500 shares.
So when it comes to AURC, there was misinformation spread everywhere. From multiple sources, it had 2 million float as the public shares. In reality, it was actually only 200K float. What happens is NASDAQ likes to make an exception for low float tickers. Now, we don't know if they're gonna go with the majority opinion of the 2 million float as the actual quote, or if they're gonna go for the actual float after you take away private investments and redemptions. And then you get the actual publicly traded float by the retail. That's 200K. Will determine whether this stock becomes the next HKD or the next T12 Holt. We've seen this recently where attention has been brought to SPACs, especially redemption SPACs. Most recently, we've seen MEOA as well as EDTX. They trade for a little bit after they redeemed some of their shares and extended their special meeting, and then the stock is just halted. MEOA, which was said to be open on June 17th, it's still not open, and it's 2 weeks later. At the end of the day, we don't understand why the stock went up, but we do have several reasons why we think it went up. The important thing is to lead with risk management and do your due diligence and know that these stocks should not be traded all the time. If you see a float this small, too risky to get halted as well as squeezed. So you should just avoid it altogether. The volatility that comes from these type of plays is way too strong to be tradable. But if you do trade it, you should trade it with some type of topping pattern. I'd always wait till the next day after the supernova or the parabolic, and you'll treat it similar to TOP. But that's all I got for you today. If you like what you saw, hit that like and subscribe button, and I'll see you in the next video. Peace.